Welcome back to Golden Rule Radio, your weekly update on the precious metals markets and everything that affects us. Miles, do you have the weekly update?
Sure, I definitely got some numbers from last week. Let's kick it off with gold first, because gold didn't really do much. We're down about $10. Definitely nothing happened in between last Wednesday and this Wednesday. Just gold's down about $10. And there certainly wasn't a new high in between last Wednesday and this Wednesday. So no, we had a nice move in gold up to, I think, 24 and then some, back down to about 23.80 now. So we'll take a more in-depth look at the gold price here, but we're going to see a running theme through a couple of these charts, because silver 30.87, $30.90 at time of recording right now, up about $1.30, but at one point it was up over $3. And in fact, silver had a 10% move up this week at one point. Platinum, same story, 1039, 1,039 an ounce. It's down about $30 week to week, but we did have an interim high in between. Same with palladium, 994, down about $15. But palladium had a pretty significant swing, not as much as silver. We had about an 8% move between low and high. And then moving over to the paper markets, the S&P was actually relatively flat all week. We had a big move last week that we mentioned in the S&P. This week it did kind of sit pretty flat, up or down from around 5,300, 20, $30 on either side of that. So a pretty stagnant week in the equities market, but a very volatile week in the precious metals. So I think maybe we start with gold. It's
hard to tell what to start with this week.
Yeah. Because, I mean, silver obviously is the exciting thing we want to talk about. But I don't know, Tori, where do you want to start?
No, I think let's start with gold because we hit an all-time high. Let's give the credit where credit's due. We hit almost 2,450 in the open market at one point. And so really exciting chart action, really exciting price action, really exciting conversations. You know, what's different this go round is that it's almost as if people are jumping off the sideline where they've been stuck on the sideline a little bit. Now it's almost as if this week has given some credence to the bull market for some reason.
Yeah.
Have you sensed that?
I've sensed that too.
Yeah, and maybe it's silver doing it alone. Gold didn't break to some significant new high. The previous high was about $25 less, $20 less than what we set this week. Silver's high was proportionately for this cycle much greater.
And we're still above 30.
And we're still above 30.
Yeah.
We can finish the week in the 30s. That will help a lot.
Yeah. And what's also happening, like we mentioned last week, is just the moving averages coming up. The longer we stay at these elevated prices, the higher those moving averages move to catch us. So this is in a week where there's not increased geopolitical tensions.
No.
This appears to be monetary or fiscal policy driven. All asset classes appear to be driving the same direction. A really fascinating thing, gold, when Jerome Powell mentioned back on March 19th that he really felt like they had tamed inflation and they were looking forward to some possible cuts in 2024 and 2025, that was a very inflationary comment. Either it was an ignorant comment because he didn't know what was already baked in, or it's stimulated because since that period of time, since March 19th of 2024, gold up 12.5%, silver up 27%, natural gas 59%, coffee futures 13%. You guys, this is in just these 2.5 months, really 2 months. And the only thing that's not up significantly that way is the politically sensitive oil, crude prices, and gasoline prices, which are down about 4% each. Other than that, we've got all these indications across the board, equities included, that last week we mentioned setting all-time highs. This is quite the ride, and I'm excited to get into a little bit deeper on gold and then some silver. What else would you point out from a technical standpoint, Miles? And since we did set those all-time highs, are you going to redraw some support levels on, again, maybe if and when we actually get that pullback we've been hoping for?
Yeah, well, certainly anytime you move up to some new levels, you have to readjust things just because we're still going to be looking at figuring out where stopping points are when you're in territory where price has never existed here before, obviously is complicated. Like that, it obviously gets complicated. And the best tools that we have is going to be what type of pricing action had taken place at previous levels that could line up with where we have these corrections back. That's one of the things that you've heard me talk about for years. So being that the new high isn't significantly above the previous one, our previous retracement levels date back to the middle of April, where you're talking gold highs at 2430. Now we're looking at gold highs at 2450. So it's not a significant enough move to where it really changes things, because we're still talking about a starting point back in the 1800s, or even the most recent one at just over 2000. So a $20, $30 addition to the market high, it's going to adjust things by a dollar or two up and down. So it doesn't change things too much. So the real question would be, okay, if we get a retracement here, what does the next high end up looking like? The next legitimate high, not $5 yet, because I don't care about $5 or $10, but what about 2750 or 3200? When we start getting into legitimate numbers that we will see in the gold price, no question that we will see them. It's never been a question of where's gold going. It's just been a question of how quick or how long is it going to take to get there.
Yeah, and what will the interruptions look like along the way?
Yeah, exactly. You know, it's funny, of all the things you just listed, the one thing you listed is the one I'm feeling the most, and that's the one that's you said was actually down oil prices, but that could just be seasonal gasoline here in the United States.
Well, and seasonally, we see prices tend to climb just because of the additives that are required in summer gasoline versus winter. But, one thing I didn't point out is copper, 26%. Rob called it Dr. Copper last week.
Yeah, that's huge.
Yeah.
Yeah, I just pulled up copper on the chart. I mean, it did have a pullback today by about 6%, but we're back at around $4.80 on copper. Hard to read. It's a very volatile market, like you mentioned earlier.
Yeah, but what has changed a lot, not a significant new high, a new high nonetheless in gold, and it's fun to be on this wave. Silver proportionately is totally different, and the gold to silver ratio, when we did that announcement to buy at 92-1 in the ratio,
It's 75-1.
Yeah, now it's popped to 77. I mean, it's up to just because of today's pullback.
Today,
But 75-1, 2 weeks ago we were still at 85.
Yeah.
That's really exciting to me.
Me
And
too.
I would love to see that be a trend that continues.
And I think it will, because copper hit an all-time high. All time. Never been this high before.
And we have to get used to that. We have to get used to saying that. The equities, all-time highs. Copper, all-time highs. Gold, all-time highs.
Yeah.
Guys, that's what inflationary monetary policy does. That's what poor fiscal management does. Those are the underlying ripples that are intact, that aren't changing. Miles, you saying over $3,000 gold, that's really nothing proportionately, percentage-wise, of a move.
No.
We have to get used to saying all-time highs. But silver, I mean, it's
Still
$18 from its all-time high.
Yeah, still has a good way to go.
Yeah.
So, I mean, I think all eyes should be on silver.
Yeah, that's like Dave has been saying on the commentary from time to time over the last couple of weeks. I mean, buying silver today is just buying gold for $1,600, $1,700.
Yeah, discounted gold. That's the way we look at it.
Yeah, and the catch-up will happen eventually. And that's the big thing with silver.
It always does.
There may be some opportunities scattered over the course of a market move back and forth, but realistically, the big catch-up you're looking for may be farther down the road. And in fact, the farther down the road it is, the more beneficial it actually ends up being for you. And we saw this back between 2004, 5, 6, when the last bull market in gold really started, and then the 08 market crash, and then things finalized in 2010, 2011. Silver did most of its move in those last 6 or 9 months. But the catch up for anybody that was patient, the juice was worth the squeeze, so to speak.
Well, and it wasn't until it wasn't until the seventh push above the $26 figure that you'd been calling for as your line in the sand for so long. Going back just a few years on the silver chart, it was the seventh try that broke through that.
Yeah, finally breaks.
So then you said, okay, and Miles, this is like it was yesterday. You said 26, 28, 30, 32, 35. Those were your points.
Yeah, 32, right?
We did 26, 28, 30, 32. So you met resistance at each of those levels, and you've seen it now meet resistance at 32.
Right.
And so should we expect a forming of a base here, reestablishing around 30 to 32, and then climbing our way in stair-step fashion to 35? I believe you, man. At this point, you're 4 out of 5 and haven't had a chance on number 5 yet.
Yeah, I think we need to break 36 and then stand back.
Yeah, and then we can be talking about all-time highs.
And the $1 million question is the timing on that this summer, Rob? I think the key is where you just said this summer.
Mm-hmm.
I don't have the years Rob does, but I'm coming on 20 here in the metals market, and I can tell you I can count the lashes on my back where I'm looking at a 30% rise in gold over the last X number of months, from 18 to over 2,400. And I'm thinking, okay, like realistically here, guys, pull back, right? Like has to be.
Yeah.
Doesn't have to.
Yeah, and that's the problem. That's the scary part, is it technically doesn't have to be, because we've looked at some charts here. Was that last week or the week before where we looked at the chart, and it's like, okay, 2020 didn't have to have a pullback when it kept going. 2009, 10, and 11 didn't have to have a pullback. It just kept going. 2006, after the real estate thing, didn't have to have a pullback. It just kept going. So there are times where markets just keep going, no matter what reason tells you they should do. And that's my concern with gold.
I agree, and it's interesting you say that because I brought in today from Momentum Structural Analysis. This is Michael Oliver of MSA, and he's a technical guy as well. And he said that the correction expectation is the sort of advice that is in no doubt what many analysts have been biased or distorted to believe, and they've been biased by the technical actions that they've grown accustomed to since the mid-2020 highs.
Exactly.
So-
and that's what I was going to say. I mean, this market has made us expect corrections.
Yes, that's right. And to Miles' point, this may not be that type of a market.
It may not
and
be.
he adds to that as well. He said, we argue that this bull trend is of greater magnitude and significance than prior bull trends. This is not just another gold bull trend. So I think that's important because he said, when it comes to the current monetary metal advance, this bull market in the precious metals, they note that the pullbacks occur in short periods of time.
Very.
It's quick and it's over, blink and you miss it, right? And so as we have said, I mean, Miles, again, you're saying shallow pullback, short lasting, not just shallow in terms of the numbers that it pulls back to, but the duration that it stays there in this type of deal. And again, Michael Oliver says, you can miss what will likely be a generational event. We strongly expect this trend will reveal much of what it has in the next year, and that it'll be much more than normal analysts might foresee. Lastly, we expect there will be only one corrective decline during that advance. So if they're right, and we see our numbers,
I think they
you
are.
better get in at that point.
Yeah, the sad thing is being here as long as I have been, and you guys honor me with continuing to remind everybody. But let me tell you something. You get used to the market whipping you with these pullbacks technically, and then you get used to the market behaving the way it usually does. Spring market rally, summer fade, fall rally, winter fade. I don't know if we're looking at anything like that again. I have my biases based on the way the market has treated me and my clients, and I'm with Oliver on this one. I think that we are in a generational move. I think we need to pay attention and take advantage. Gold's down 2% today. I don't know the percentage that silver's down.
4.
4?
I mean,
Okay.
it was 3 3/4 right before
Close
recording,
enough.
but it'd come down 4% from that morning high.
This may be the day to buy.
I don't disagree with that. And we've said this over and over again. In this type of a market, you buy the dips anyway. When you get a 2% and 4% dip
That's as good as you can hope for.
in a day,
Yeah.
I mean, that would be a great weekly dip, right? So
Right.
that is as good as you can hope for. And to me, all of this, again, nothing is showing any sign of reversing from
No.
an underlying fundamental standpoint.
No,
I don't
we
even
are
need to get
going
into
higher.
them.
We are going higher. Even if you buy on a strong day, it doesn't matter. But if you can buy on a dip, buy.
Yeah. Well, and I love his point in there. That whole quote is so accurate, and it's so humbling to any of us out there who like the charts, because it's 100% correct. The repetition you get lulled into And I know you've heard the uncertainty in my voice over the last couple weeks because it's been frustrating, because there's a habitual pattern that you tend to fall back on. But I have said this in years past, charts work until they don't. And there are those periods where they don't. And what he's arguing, I think there's good argument for this too. I think there's good agreement here, is we may be moving into one of those periods of time where they don't. Because I also liked his point about we foresee one pullback. Well, you know what happens when you have one pullback? 2020 had one pullback. It was COVID. 2008 had one pullback. It was a stock
And the
market
pullback
crash.
in 2008 from the paper market to the physical market only lasted 6 weeks.
Right, and I think that's what he's getting at.
The COVID pullback didn't even last 6 days. So these pullbacks, like you're referencing, and those are the two significant pullbacks that we have seen lately, very short in duration, 6 weeks, a handful of days, and then the market reversed. Come on.
And they had nothing to do with gold. Gold was a passenger on a bigger fire sale.
That's a great point.
It just reacts, right? It's
Yeah.
not predicting anything. It's just helping tell the story of what's being told by other asset classes and other policymakers,
Correct.
whether it's economic data coming in or whatever that is. But Miles, that's, it reminds me too, when we started this bull run, when we broke through 2080 finally, and we got up over 2200, and we were talking about, is gold overbought? And we're like, well, no, it's not. I mean, in terms of, as far as looking back with retrospection and analyzing other bull markets, this was only a double. We're up 100% from that end of 2015.
Yeah.
And we have shown repeatedly how these bull markets don't exhaust until they're 300, 400, 800% increases. And so, again, to their point, they feel like gold is only beginning to enter the more dramatic phase of its bull trend. Like we're just now entering, which would go back to your analysis, Miles, of going all the way back to 1972 and what these bull markets look like, which is why $4,000 gold is just it's just nothing.
No.
It sounds like a big dollar figure, but again, percentage-wise, it plays right into a very conservative, typical bull market type of run before you get your real healthy correction.
Well, that'll do it today for Golden Rule Radio. Thank you all for listening. Miles, where can they find us?
One of the best places to stop by, I think, is certainly our website at McIlvaney.com. Along with this show each week, we have our weekly podcast. We have written pieces. We're trying to put out a bunch of info, and we highly encourage you to swing by once a week and check the writing, the audio, and the video that we're putting out to make sure you're staying on top of the metals moves on a weekly basis. Better yet, if you'd like to discuss your personal portfolio with Rob, Tori, myself, or any of the advisors here at McIlvaney Precious Metals, I'd recommend giving us a call. We can be reached at 800-525-9556. And as always, if you just want to poke around, YouTube is great. We're here every week. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks again for listening and have a great week.